The Labour Department recently announced changes to the 401k program. Now, for the first time, fund managers will be able to invest in private equity. In other words, invest in companies that aren't publicly traded. The potential benefits are obvious. Private equity can offer a much better return on investment than safer bets like government bonds. But critics say the changes will make 401k costs skyrocket, that risk will increase dramatically, and transparency will also be affected. And so to go over the pros and the cons, we have CEO of Napa Valley Wealth Management, Kelly Crane. Kelly, thanks so much for joining us.
Thank you, Paul. Great to be here.
Thanks, great. And Kelly, before we get your opinion on whether you think the changes will be positive or negative, maybe give us an idea of why the changes and why now.
Excellent. This is a trend that started back in the mid 80s when interest rates started falling in the bond markets. Very low interest rates mean that pension funds and 401ks have a hard time making enough return to cover inflation and their expected return numbers. So looking to alternatives, for example, real estate and private equity, give them the ability to earn above average returns over sustained periods of time.
And of course, times when interest rates are very low, it tends to be times where there's a lot of uncertainty in the market. Do you think that at times like this, with things like record unemployment, very depressed economic activity, is this the right time to open up these 401k plans to private equity?
Timing is an issue, Paul, but basically when you're making private equity investments or real estate investments, you're expecting to hold these for a very long time period. So you use the portfolio assets that are short-term and bonds in order to cover your cash flows, and then have the private equity or real estate investments more as an inflation offset and a long-term return generator.
Very good. And for yourself, was this a positive piece of news for you? Was it something you were waiting on?
I think so. I think, again, the problem is when you look at bond interest rates in the low single digits, it's going to be very hard to overcome inflation and make a real return that's meaningful. So expanding the opportunity for these pension funds to actually make a better return is a positive endeavor.
Yeah, it's very true. And will there be some kind of a cap, on the percentage that can go into these private equity firms?
Normally, the pension funds are managed by a committee and they have an asset allocation that they determine ahead of time. For example, the California State Teachers Retirement System just announced they're trying to increase their private equity from 8% to 13%. So it's not a large percentage increase, but it is a lot of money in a large fund. I think the pension plans need to adhere to the prudent man rule and not go overboard with these type of investments.
And how exactly, maybe you can give us some insight, how exactly will the fund managers choose which companies to invest in?
That's an interesting question. So normally they would have a sub advisor that specializes in those type of investments, and their whole job is to screen these companies and look for opportunities. That particular fund manager would work in a niche, say small or mid-sized companies, maybe growth or value companies, and they know that market very well. So the fund manager has the ability to screen and pick those investments.
And for the people, the investors, the people who are contributing to their 401k fund, do they have control over things like this if they want more exposure or less exposure?
Normally you have the ability to shift your 401k portfolio at least at regular intervals, for example, quarterly if it's not daily. So you can choose to allocate more to equity or more to bonds. It's up to you and your individual account. The larger pension funds like the California State Teachers, they manage that for their employees and the individual has no discretion over the allocation.
Very good. And the Department of Labour have talked about this. When will we start to see 401k plans exposed to private equity?
That's a good question. I'm not sure how they will regulate the amount that is available for employees. Maybe they will only allow it in the employer side of the plan, but that taking it all the way down to the single employee level is going to be the challenge because pension funds have already been doing this for years.
That's great. Okay, Kelly, that's very informative. Thank you very much for your time. We hope to have you back on again soon. Thanks so much.
Thank you, Paul.